taking stock of what's going on across the globe, and it looks like we put the brakes on that gaining streak, at least when it comes to Wall Street. So clearly, after 5 straight days of a smart rally that we've witnessed, most of the indices seem to have lost ground following that Fed announcement. You had the S&P 500 as well as the Nasdaq that snapped 5 consecutive days of winning, and the Dow Jones as well was mildly flat. Clearly, you had the Fed minutes, which pointed towards, as of now, no hint of rate cuts coming about. And taking a look at that revealed the policy that they have maintained the monetary policy had to be restrictive, and as of now, very little appetite for rate cuts. So that's really the overnight move on Wall Street. You've also got the Asian markets this morning that are looking a little bit mixed this time around. And for the most part, you've got the likes of Kospi as well as the Hong Kong index and China, which have moved on the back foot. So a restrictive Fed policy, Nikunj.
See, it appears that there is no rate hike around the corner, but it also appears that no rate cut also is around the corner, which means it is pretty much going to be status quo. And from a financial market standpoint, as long as markets are able to predict whether rates are going to move higher or lower, they will adjust. Markets don't like surprises. So there is nothing in the FOMC meeting which could be called as a surprise. Global cues, while the run-up in the global market from end of October, from early November actually has been quite linear. Markets sometimes find a reason to just correct, just a little bit of chop and churn here or there, nothing scary. So I will not use the word bad to describe the global setup, but I would say global cues are a bit soft. Can Indian markets move independently of what is happening in the global markets? I doubt it very much, because frankly the common ledge on which markets in the month of November have rallied is largely global macro. And if global markets they get jammed, it's safe to assume that Nifty, which is already looking jammed, is going to further either consolidate or is going to just spend time in a narrow range. So from a oversold zone, Nifty made a comeback. There was bout of short covering. It appeared a couple of days ago that Nifty was ready to gain some kind of an elevation, but looks like it's going to be back to square one, where we would be using phrases like the party in small cap continues, mid cap continue to outperform, and Nifty continues to languish. I think we are again going to that same rhythm of the market.
Yeah, looks like it, because the market yesterday also managed to just consolidate. 19,800 is something that we did not manage to sustain as far as Indian markets go, and the Nifty has managed to actually snap the losing streak. We did see a gain of almost 100 points at the Nifty level, but it was very, very range bound during the trading session, and overall the range for the trading session itself was limited to just around 100 points. It was Reliance, that heavyweight was up around 1.5%, and HDFC Bank too managed to gain almost 0.7%, and that's the reason you saw good gains on the Nifty. Nifty Metal also saw reaching those 1 month high levels on back of the fact that dollar index has cooled off substantially. It's now around 103.6 thereabouts. Pharma, real estate, these are two areas of strength in the market right now. Look at those rallies that we have seen in the real estate stocks, many of them sitting at all-time high levels. So that is what is supporting one end of the market. Having said that, it's Nifty Bank, which is the problem point for the markets right now, continues to underperform by a huge margin. And even if you look at the trends coming in from FNO, Nikunj, it says that perhaps there was fresh longs as far as Nifty is concerned. And for Nifty Bank, there was only short covering. There's still not, conviction to go fresh longs as far as Bank Nifty is concerned.
No, Nisha, I mean, the Bank Nifty in a sense is just getting jammed, and it's getting jammed now because of technical factors. Technical factors are largely FI selling, and this is a sector where the ownership levels are high. So most of the funds, most of the schemes, most of the global allocators, they overweight financials. So if you're already overweight a sector, you cannot just go supremely overweight when the benchmark is, so the composition of financials, including NBFCs and insurance and other sectors, I guess for most of the big funds and PMS schemes is anywhere between 25 to 35%. Very few funds actually have a underweight positioning on banks. So when a sector is underperforming, either you need a fresh buyer to come in. That fresh buyer cannot be domestic institutional investors because they're already loaded up. Then you got FIs which are selling, so supply seems to be emerging. So when there is no fresh buyer in the town, in the existing investors who are getting flows, they do not have the appetite to add more into banks. I guess the sector goes through a technical path, so to speak. Then on top of that, you've got the RBI, which has raised concerns on unsecured loans. The NIMs are coming under pressure. So then markets are saying that, okay, there is selling. The numbers are not going to be that strong in terms of the near-term profitability for next 2 or 3 quarters. Let interest rates settle down. Let things settle down on the global front. Let flows come back, and then maybe banks will start participating. The sheer value and the sheer earnings delivery is not really driving some of these banks higher. Since it's a large sector, it will only move higher when you see either flows moving or when you see something substantially changing on the momentum front, which I'm afraid is not changing.
Flows or something on the momentum front. Otherwise, nothing is really going to move the needle when it comes to some of these banks. But that aside, one can't ignore the kind of moves that we're seeing within the broader markets. In particular, the small cap index perched near record highs. And interesting data that we've culled out as well with respect to the small cap to Nifty ratio. The fact that it currently stands at about 0.7%, it's the highest since the year 2018, but it's still below the 10-year high of about 18%. Nikunj, the fact that it's above those pre-COVID levels, what exactly is this indicative of?
See, there is this, the most talked about narrative in the market is that, okay, there is a bubble and there's a trouble in the small and the mid-cap stocks. And you may say, okay, there is. But not everything in the small and the mid-cap space, I guess, could be called as expensive. Yes, sliver of the market offers value. But sliver of the market, I think, is also in that bubble or trouble category. How do you look at this graph, and what is the explanation of this graph? The small cap to Nifty ratio. And if one really looks at the rallies which the small and the mid cap indices have done, now this is self-explanatory graphic which is there on your screen. But if you flip it around and look at the small cap rallies, and this is pure maths, and we've looked at last 4 instances, the mid cap rally actually is really at a median level. Between 2009 and 2010, when markets were coming from the crisis of GFC crisis, the rally was 42%. The real bull market rally between 2004 and 2007, 100% plus. 13-17, the bull market rally 87%. Now, to put things in context here, the current rally from the COVID low, small cap to Nifty ratio is only 69%. So even based on historical numbers, it is not that this time around the mid-cap rally has been outlier, and the mid-cap rally in a sense or the small-cap rally in a sense is something which is very scary. I look at the framework in the following manner. Sliver of the mid and small-cap stocks offer value, but sliver of the market is still in bubble territory. So there are two extremes, and that is why you have to avoid. With each passing day, the value is getting eroded, and with each passing day, the bloating in the mid and the small-cap stock is starting. But I don't think it has become a time bomb that it's tick, 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 and it's going to blast.
So seeing a bit of bloating, there are extremes in the market which are getting fraud.